Iraqi Dinar Today latest news. Good morning and welcome to a critical edition of the program. What you are about to hear may reshape your perspective on the extended narrative of the Iraqi Dinar and the Vietnamese Dong. A subtle, yet undeniable, shifting of forces is being observed across financial and governmental sectors within the United States, pointing toward a significant, coordinated movement that many in this community have long awaited. The evidence emerging is comprised of quiet adjustments, highly secure, non-public meetings, and sudden, seemingly deliberate restraints being placed upon banking operations regarding specific foreign currencies. For years, the notion of a currency revaluation, or RV, has been a topic of intense discussion and enduring patience. Many held tight to their currency, driven by the profound hope for a transformation that could redefine their futures. Today, the landscape is altering. The early signs of what some are calling the hidden wave are beginning to surface. This quiet wave is characterized by preliminary RV activities, unexpected clues concerning the Dong's rate, and a growing chorus of consistent reports from everyday currency holders across diverse states. The sheer volume and uniformity of these accounts, which appear disconnected yet tell an identical story, is reaching a point where they can no longer be simply dismissed as isolated incidents or mere speculation. The pattern, for the first time in recent memory, is becoming discernible, suggesting that the preparatory stage is giving way to a new phase of activation. This perceived shift demands the full attention of everyone interested in this topic, as the years of waiting may finally be concluding, giving way to an organized process underway beneath the surface of mainstream observation. Across a wide geographical spread, including states such as Texas, Florida, Georgia, Nevada, Arizona, Tennessee, Utah, and Colorado, reports of unusual, non-standard activity related to foreign currency exchanges are accumulating. These occurrences are explicitly distinct from the typical, routine transactions that might take place at airport kiosks or standard bank teller windows. Instead, they are being described as structured invitation-only gatherings held within highly secured, sometimes unmarked, facilities. The presence of additional external security at these locations has been noted, adding to the atmosphere of controlled confidentiality. The details emerging from these accounts are remarkably consistent. Participants speak of swift and thorough document verification processes, the use of advanced biometric security measures, and the deployment of professional-grade currency validation equipment. This equipment reportedly is designed to meticulously check watermarks, print years, serial numbers, and all anti-counterfeit markings with high precision. While the authenticity of every single claim cannot be independently verified by us, the striking similarity in the procedures described by unrelated individuals across multiple cities implies a coordinated effort is indeed taking place. This uniformity in reported procedure, involving private appointments, the mandatory signing of non-disclosure agreements NDAs, and the consistent description of facilities as immaculate, silent, and extremely secure, leads many to believe the revaluation process is advancing into a new, strictly controlled phase. This coordinated secrecy is the reason why many in the Dinar and Dong communities are convinced that the hidden wave has silently begun, completely removed from public visibility. One of the most compelling and tangible signals of this underlying change involves the sudden and widespread policy adjustments occurring within traditional banking institutions. Numerous viewers have reported an abrupt inability to purchase foreign currency, specifically citing the Iraqi Dinar and the Vietnamese Dong. These reports include instances of previously placed foreign currency orders being canceled, and, in some cases, bankers outright refusing to discuss these specific currencies with customers. The bank's routine denial of any deliberate policy change is hard to reconcile with the synchronicity of these restrictions. The timing is particularly notable. The reduction of publicly available foreign currency coincides precisely with the anecdotal increase in reported activity at private exchange or redemption centers. This suggests that institutions may be undertaking internal preparations for a forthcoming financial event. Whether banks are motivated by concerns over financial liabilities, awaiting explicit regulatory instructions, or simply adhering to new internal directives, the practical consequence for currency holders is a sudden tightening of access. When a currency that has been readily available for purchase for many years suddenly becomes inaccessible, it sends a clear signal that a systemic shift is occurring out of public view. This banking behavior aligns with prior warnings from internal observers who cautioned that as the RV activation phase nears, public access to undervalued currencies would be deliberately limited to prevent speculative last-minute surges in buying activity. Furthermore, a distinct pattern of communication is emerging among currency holders, providing another layer of indirect evidence. Reports detail recipients receiving strange phone calls from blocked or unfamiliar numbers, along with short, cryptic messages urging them to stay ready, watch your email closely, or to anticipate an appointment window soon. There are claims of individuals being advised to ensure they remain reachable by phone within a very specific, limited time frame, sometimes as short as the next 72 hours. Other reports suggest that former banking contacts, financial advisors, or old acquaintances from the currency market are now offering vague, yet urgent, signals that a major financial unfolding is imminent. The messages are consistently characterized as nonspecific, never public, and always cautious in their wording, yet possess a clear underlying sense of purpose and immediacy. The synchronized appearance of these vague but urgent communications across multiple states perfectly fits the profile of a controlled, phased, and highly strategic informational rollout. Those who have closely tracked information flows within this community for years recognize this shift. A period of extended silence giving way to sudden, cautious urgency indicates the activation of a new stage. It is the type of controlled communication typically associated with a large-scale, systematic activation where different components are being mobilized discreetly and sequentially. The reported activities inside the alleged redemption centers are being described in surprising detail and with a high degree of procedural uniformity. Participants claim the process invariably starts with a rigorous identity verification, requiring multiple forms of government-issued photo identification, such as passports and driver's licenses, often supplemented by a second proof of residence, like a current utility bill. Following this, the vital currency validation phase commences, where all bills are reportedly processed through high-precision scanning machinery. These machines are said to conduct an immediate and detailed inspection of the currency, checking all security features, including watermarks, serial numbers, and print quality, and sometimes involve UV light or even biometric scanning like fingerprint or facial recognition. The comprehensive nature of this verification is entirely consistent with the expected protocol for an exchange authorized or overseen by a government or treasury-level entity. Currency integrity is paramount in a revaluation, and the reliance on such professional, high-grade systems, as opposed to simple bank counter checks, logically explains the level of security and precision described. The reported speed of this validation process, often taking only a few minutes, suggests that the personnel and the centers themselves were meticulously trained and equipped long before the first participants were ever invited. Perhaps the most talked about and compelling element of these early accounts revolves around the purported rate sheets that some participants claim to have witnessed. While all individuals who have entered the centers are allegedly bound by strict non-disclosure agreements that legally forbid the release of exact figures, external reports from friends or family members of early exchangers describe a remarkably consistent pattern. These sources indicate that a tiered system of exchange rates appears to be in operation, varying based on several key factors. These factors include the specific currency being exchanged, the total volume of currency held by the participant, and whether the exchanger has presented a formal proposal for a humanitarian or community-based project. The general street rate is consistently described as the baseline or lowest available figure. Above this, a contract rate is mentioned as a notably higher value, and the special humanitarian rate is consistently characterized as significantly elevated. Specifically, those holding the Vietnamese Dong are reportedly seeing unexpectedly strong numbers, which reinforces the long-held speculation that Vietnam has been quietly and successfully building its economic foundation in preparation for a major international currency adjustment. While the absolute accuracy of these reported numbers cannot be confirmed, the uniformity of the descriptions strongly suggests a real, structured, and confidential financial event is unfolding behind securely closed doors, with those who have already participated maintaining strict legal silence. The issue of the mandatory non-disclosure agreements, or NDAs, is a central point of confusion and discussion. Many individuals who report being among the early exchangers state unequivocally that they were required to sign a comprehensive NDA immediately upon entering the exchange center, and notably, before any rates were disclosed or any further documents were signed. This legally binding agreement reportedly prohibits them from revealing any specific details regarding the location of the exchange, the exact rate they received, the procedures followed, or the anticipated timing of the public release. NDA are a standard, critical tool in high-stakes financial operations, especially those involving major corporate mergers, confidential governmental restructuring, or early access to restricted financial systems. Their use is common in situations where market stability or a controlled rollout is essential. The reported application of NDA in this context serves a very clear purpose: to prevent any sudden market disruption and to ensure a managed, non-chaotic release of information and funds. The mere existence and enforcement of these stringent legal agreements suggests that the process underway is not a simple, low-level transaction, but a sensitive, coordinated, and legally protected operation that points to something far larger than a standard currency trade. An intriguing and emerging behavioral trend involves the conduct of bank managers and private bankers who previously interacted with currency holders. Reports from the community indicate that personnel who were historically dismissive of the Iraqi dinar, often labeling it as having minimal worth, or the Vietnamese Dong, which they deemed highly volatile, have abruptly adopted an attitude of extreme caution. Many are now reportedly refusing to engage in any discussion about these currencies at all. Some managers are allegedly informing customers that they are currently unable to discuss foreign currency matters, an unusual departure from the typical customer service-oriented environment of a traditional bank. This silence from high-level banking officials is often interpreted as far more telling than any open statement or confirmation. When banks begin to suddenly cease the sale of particular currencies without providing a clear rationale, when professional emails go unacknowledged, and when staff adopt a visibly guarded demeanor, it is widely believed to indicate that specific internal guidance or a memo has been secretly circulated. Internal guidance of this nature often serves as a precursor to the public rollout of a substantial financial change, ensuring institutional compliance before an official announcement. A palpable sense of urgency, distinct from the speculative hype of prior years, is being described by a growing number of currency holders. They speak of a discernible shift in the overall atmosphere, a feeling of external pressure to ensure their documents are perfectly organized, their identification is current, and that they remain on high alert for any incoming communication or scheduled call. This is not the historical rumor-driven excitement, but a feeling grounded in the confluence of newly visible and consistent real-world developments. Widespread bank restrictions, confirmed activity at private exchange centers, a sudden and coordinated silence from previously talkative insiders, and genuine individuals claiming to have participated in early, confidential appointments. The collective weight of this evidence suggests an acceleration of the underlying process. A hidden wave operates by moving discreetly at first, known only to a limited few, but once that momentum reaches a critical point, it starts to ripple outward, becoming undeniably visible to the wider, observant public. The community perception is that the current phase represents the very beginning of this visible expansion. As this developing wave continues its forward motion, holders of the Vietnamese Dong are keenly observing clues that suggest an upward revaluation may be on the horizon for their currency. Over recent months, reports from economic analysts have detailed Vietnam's successful efforts to enhance its internal economic stability, formalize and expand critical trade agreements, significantly grow its manufacturing partnerships, and solidify its adherence to international financial compliance standards. These calculated, strategic actions are universally recognized economic precursors to any major currency revaluation or substantial adjustment in international value. Concurrently, some reports from viewers indicate that local banks, which had previously been willing to sell the Vietnamese Dong freely, are now either imposing strict limits on sales or requiring customers to undergo extended waiting periods for currency acquisition. While it cannot be definitively proven that these banking changes are directly and solely linked to a revaluation event, the consistency of the pattern is too compelling to ignore. The emerging narrative suggests that Vietnam is aligning itself with global financial reform initiatives in a deliberate, controlled, and strategically quiet manner, setting the stage for a potential currency shift. Simultaneously, the Iraqi dinar remains fundamentally positioned at the very heart of the entire revaluation conversation. Internally, Iraq has been focused on strengthening its national financial system, consistently increasing its oil production capacity, implementing significant adjustments to its national budget structures, and demonstrating cooperation with various international fiscal regulations and bodies. A prevalent belief within the community is that Iraq has already finalized the details of its own revaluation strategy and is merely awaiting the appropriate moment for a synchronized global release. This anticipated timing is often linked to the broader, global context, which includes recent reports of increased gold reserves across multiple nations, deeper integration with Basel-based international banking regulations, and widespread financial restructuring occurring across the Middle Eastern region. All of these macroeconomic indicators suggest that Iraq is strategically positioning itself for a powerful re-entry into the global economy, significantly stronger than in years past. Historically, whenever Iraq has achieved a substantial degree of domestic economic stability, the value of the dinar has followed that trajectory, solidifying the widely held view that the dinar acts as the anchor for the entire hidden wave of currency adjustments. A recurring and crucial warning originating from sources considered internal to the process is the absolute necessity of maintaining strict privacy regarding any personal plans or holdings, especially on public social media platforms. If the early exchangers are indeed operating under legally binding NDA, any public disclosure of their experience could result in severe consequences, including potential disqualification or legal action. Even those who have not yet participated are strongly advised to exercise extreme caution. Publishing details online, such as the volume of currency held, the source of purchase, or any expected exchange rate, creates unnecessary security risks and could potentially compromise the controlled nature of the process. Furthermore, if the exchange centers are operating under strict confidentiality protocols, drawing any unwarranted public attention to oneself could be detrimental to a future appointment. The overwhelmingly recommended strategy is to remain private, meticulously prepared, and highly alert. This essential discretion ensures that no one inadvertently jeopardizes their opportunity or becomes a target for increasingly sophisticated scams. As the excitement escalates, the threat of financial scams has also become more pronounced and aggressive. Viewers continue to report receiving unsolicited emails or communications that demand upfront cash payments, transfers of cryptocurrency, or immediate access to personal bank account information. These attempts must be immediately recognized and dismissed as fraudulent. It is imperative to understand that no authentic or official redemption process will ever request an advance payment, a gift card, a private password, or verification of a crypto wallet. Any communication that is genuinely official would be delivered through a secure, encrypted, direct, and professional channel, never through sloppy, rushed, or public-facing methods. Scammers intentionally target the hopes and eagerness of the community. The strongest form of protection is to maintain a high degree of skepticism. Verify every single piece of information through confirmed, legitimate sources, and trust only official communication methods. Financial security should never be compromised for the promise of a quicker or easier exchange appointment. Preparation, at this critical juncture, remains the single most important and actionable step a currency holder can take. It is vital to ensure all forms of identification are perfectly current and easily accessible, including passports, driver's licenses, and any necessary secondary documents, such as recent utility bills or bank statements. The currency itself must be meticulously organized, categorized by denomination, and verified to be clean, undamaged, and complete. All records proving the currency's legitimate purchase, such as receipts or transaction logs, must be readily accessible. For those who may receive a call for a redemption appointment, it is highly recommended to prepare a small, organized notebook containing a list of questions and notes. This comprehensive preparedness not only helps to prevent unnecessary delays during the appointment, but also projects a professional and ready demeanor. If the hidden wave is indeed underway, those who are thoroughly organized will likely navigate the process with greater efficiency, while those who are unprepared may face significant difficulty in catching up to the moving schedule. A key point of interest for many viewers revolves around the potential role of humanitarian or community projects in the exchange process. Reports from individuals who claim to have undergone early exchanges strongly suggest that presenting a well-defined project proposal may serve as a mechanism to unlock higher, structured rates or access to specialized financial programs. These proposed projects do not need to be massive global initiatives. They can be focused on local community needs, such as educational funding, small business incubation, or local infrastructure improvements. The fundamental requirement is that the project must be clear, demonstrably practical, and genuinely beneficial to a community. If higher exchange rates are truly linked to a verifiable humanitarian or community intention, then the proactive preparation of a detailed and professional proposal could be a profoundly significant step. This structural arrangement would align with the underlying concept that the revaluation is intended to be a force for global and local rebuilding, extending beyond mere wealth transfer. Further intensifying the sense of urgency is the repeated discussion of an alleged 48-hour acceleration window. Some sources suggest that once the specific tier of currency holders, often referred to as Tier 4B, is fully activated, the most favorable exchange rates will be offered for a strictly limited time, potentially spanning only 48 to 72 hours. After this brief period, the rates are speculated to adjust downward as the broader public enters the system. Whether this specific window is an absolute fact or merely a cautionary speculation, it has created a clear imperative for readiness. Currency holders are strongly advised to remain physically close to their phones. Ensure their email contact information is continuously updated, and avoid making any travel plans that would take them far from their current location. Missing a critical notification or the assigned appointment window, should it arrive, could potentially mean forfeiting the opportunity for the premium exchange rates. Being fully prepared and immediately responsive at the right moment could be the decisive factor in a life-changing financial outcome. As this hidden wave gains broader recognition, people are increasingly considering the immense global implications such an event would inevitably trigger. The revaluation of the Iraqi Dinar and the Vietnamese Dong would not be an isolated, single-country financial event. It would create ripple effects across numerous sectors, including global oil markets, international import-export dynamics, regional political alliances, and the foundational structure of global finance. Other nations currently holding undervalued currencies would likely be compelled to accelerate their own adjustment preparations. Major global banks would need to restructure their liquidity management systems. International investors would potentially shift vast portfolios, and economic influence could experience a notable reallocation from traditional financial centers to emerging economies. A currency reset of this magnitude would fundamentally reshape global economics in ways that are currently only beginning to be imagined by analysts and experts. The sheer scale of the potential impact underscores the seriousness of the reported activities. A natural and healthy skepticism persists within the community, which is to be expected given the long and often rumor-filled history of this topic. However, the pattern currently taking shape is markedly different from the purely theoretical discussions of past years. For an extended period, the updates consisted largely of speculation and unverified rumors. Today, the core elements of the news involve verifiable changes in the real world, documented banking restrictions, reports of confidential appointments in multiple cities, a high degree of consistency in the procedural accounts, and a pervasive silence from previously talkative officials. Skepticism serves a vital function, protecting individuals from the pervasive risk of scams, but an excessive degree of skepticism at this stage runs the risk of causing one to miss an actual, verifiable opportunity. The objective must be a balanced approach, remain deeply cautious, but simultaneously maintain a state of absolute, practical readiness. The current moving wave is not characterized by loud pronouncements or public chaos. It is slow, meticulously deliberate, and highly strategic in its execution. As this developing wave continues its measured expansion, it is highly anticipated that a greater number of people will begin to observe corresponding shifts in their own localized financial environments. This may manifest as further policy changes within commercial banks, a further tightening of official communication channels, and more cities across the country reporting the quiet, background activity of private exchange centers. When this hidden wave ultimately reaches its visible peak and the evidence becomes undeniable to the wider public, a formal, public release is expected to follow shortly thereafter. Those individuals who have demonstrated extraordinary patience and belief over the course of many years may finally be on the cusp of witnessing the precise moment they have been preparing for. The historical notion that a revaluation is merely a rumor is gradually fading. The factual evidence is mounting, the emerging pattern is clear, and an authentic, coordinated financial event is visibly unfolding. Now, in conclusion, this moment demands a measured response characterized by calm, organized preparation, clear, focused attention to detail, and a constant state of awareness. Regardless of the volume of currency you hold or your tenure in this community, the fundamental principle remains the same: stay ready. The hidden wave is actively moving across the country. Reports from both Dong and Dinar holders are growing in consistency and strength, and early action appears to be an undeniable reality. The revaluation is transitioning from a future possibility to a step-by-step visible reality, piece by piece, location by location, and appointment by appointment. Stay alert, prioritize your security, and remain completely prepared. Your moment may arrive sooner than you think.